It finally happened. An earnings report from a hyperscaler proved that there is ROI in the capex we are seeing towards AI systems and infrastructure. The company we're talking about is Microsoft, and I was genuinely surprised when I read through their earnings report released yesterday how good the earnings were, how much traction they're getting for their products, their suite of products, how much their Microsoft Copilot offering is getting steam, moving from 20 million users to 30 million users just in a month. How we did see the cloud business and Azure business just continue to grow beyond all expectations. How they did not raise the capex going forward. How they are bringing new, cheaper AI models into the market space. So this was generally something that surprised me a bit, and I think this will change the narrative regarding AI spending going forward, and it will provide a good foundation, not just for SaaS companies out there, also for the AI infrastructure companies. We have seen lately, the latest month, a lot of companies has lost a lot of market share. For example, AMD. We have seen some of the smaller players like Marvel, Astera, Credo Inc., etc. Some of the companies that are providing the foundation for the artificial intelligence. A lot of these companies has get hit lately in the stock market, and seeing Microsoft at this moment in time providing such a strong earnings report, I would say it was flawless. That is something that I think will change the narrative that is out there at the moment regarding AI spending, that there are no return on investment for AI spending. It's just hype. Well, Microsoft are showing us that now their consumers and customers are doubling down on the offerings. They are getting real world value for the things that they are buying. And I think this will bring a lot of support in my investment thesis long term regarding a lot of the infrastructure play I see being high growth companies, for example, networking AI companies and companies like AMD, for example. So today I'm going to take you through what I see in this earnings report that gives support long term for a bit bullish thesis on the market and on artificial intelligence, and why I think there are a bright future despite the latest downturn in semiconductor stocks, and this will be very interesting. So hopefully you will enjoy the ride. So this is the press release of the latest earnings report from Microsoft, being yesterday, and this is what changed the game. So the revenue was $90 billion, up 18%. And with the scale of this company, you must understand that 18% is enormously. And a company that wouldn't be able to integrate artificial intelligence in their products wouldn't have 18% increase at this moment, because the type of companies they have, they want the best out there and they want to make use of artificial intelligence. The operating income was $40.6 billion, increased 18% also. We're seeing the net income being $35.8 billion. So the top line growth is also getting to the bottom line with the net income and earnings per share, and that is what we want to see as shareholders, and that's also what Wall Street want to see. And that increasing 31% are providing us with information that efficiency is going well at Microsoft, despite increasing capex, despite having maybe bigger costs in terms of depreciation, etc. They are still increasing their earnings per share with 31%. So this company really knows how to integrate their infrastructure spending and get leverage out of it and get more revenue. And that is, I think, why the results Microsoft is providing here will be a turning point for the AI market, for the semiconductor market, and also for maybe SaaS long term, because these are showing us that the spending company are doing in terms of artificial intelligence infrastructure on compute, on networking, is really bearing fruit. And this is the core of the offering Microsoft are having with their intelligent cloud. They need compute and they need to spend. And what Wall Street want to see, and also what all of us want to see, is that we are getting return on investment regarding what Microsoft are doing. And I think this was the quarter that were proving a lot of us wrong regarding what we see as a soft or weakness in the capex of all hyperscalers. we do see that maybe Alphabet's capex grew too big and the marketplace didn't like that. We did see that Meta had some softness in their business, but Microsoft, this is a flawless earnings report, and I think Microsoft as a whole are really showing that artificial intelligence spending is here to stay. They're providing us with new models that are cheaper, more efficient. They are also combining that with some power from ChatGPT, from Anthropic, from OpenAI, etc. And overall, this is really bullish for the marketplace as a whole. So basically, they are advancing the frontier on the cost to outcome curve, ensuring that every customer can turn tokens into business results, said Satya Nadella. And obviously, that's the CEO of Microsoft, and that's what everyone wants now. They want more money for what they spend on AI, and you often heard terms like tokens per dollar, and that is the key what can I say initiative from Microsoft at the moment. I listened to the whole earnings call, and they are actually providing us with a lot of new models. These new models are built on the fact that they know how OpenAI has shaped ChatGPT, and also how Anthropic is building their cloud models, etc. And by using that knowledge and having maybe the sharpest minds out there, they are trying to reshape how we build our large language models and make more what can I say not generalized models, or this is like a business case where they are having more like smaller specific models for different use cases that they use in different parts of their offering. And I think this is the way to go for Microsoft long term. This is how they will provide more efficiency, more tokens for the dollars. And there were loads of examples throughout the earnings call when or where they said that they are actually providing more intelligence, better answers, cheaper than the counterparts and I guess the big ones here is Gemini and the enterprise offering from Google, but also obviously Anthropic, and they are increasing their enterprise offering, and also OpenAI and ChatGPT. So seeing Microsoft integrate AI as they do in all their products as flawless as they do, that's really positive. Maybe the other companies need to take a look long term at their growth, because seeing this type of innovation from Microsoft and efficiency might provide some price pressure on other companies out there. So it's very good for, I think, semiconductor companies as a whole. It's showing us that AI is here to stay. It's also good for consumers getting more tokens for the dollars, but it might put some pressure on companies like Google, Anthropic, and OpenAI. They're also stating here that they deliver a strong quarter with 59.3 billion in the Microsoft Cloud. This show us that the cloud is the main driver of Microsoft's revenue, which was about $90 billion, up 27% year over year. So that's very bullish news. Often, if you watch Microsoft, the Azure growth and the Microsoft Intelligent Cloud growth is what you want to see accelerate, or at least being higher than some of the more mature businesses that they have. So if we go down, we can see here that Microsoft 365, the classic one with, for example, the words, Excel, etc., increased 16%. So not as fast as the cloud, but still quite fast. The consumer cloud revenue, not as much as cloud overall. Consumer cloud 24%. LinkedIn revenue increased 12%. So LinkedIn is getting like a big beast now for Microsoft, but obviously it's a more mature part of the company and not as fast as a growth vector as other things. And Dynamics 365, that is like their offering for CRM, so customer relations management, etc. So similar to ServiceNow, similar to Salesforce, that type of services. So this is really an enterprise giant. They are in the intelligence, network security, obviously the offerings with Word, Microsoft, Windows, all of these things. And they are really trying to integrate artificial intelligence in an efficient way throughout their offerings. Here we also see Azure and other cloud services increased 43%. So this is where they grow the fastest, and often this is a number that Wall Street are following very closely. Windows OEMs and devices revenue decreased, so they have some parts of their businesses that are not like on the high steam at the moment. Same with Xbox; they are talking about a reset in their Xbox businesses at the moment. Obviously, they have a new chief for Xbox, a woman. I can't remember her name at the moment, but they are basically trying, I think, to use the expertise they have. They have like some of the best gaming studios out there, and they're gonna use the studios and their competence in hardware to create the new Xbox Helios coming 2028, I think. And that's actually hardware I'm very interested in myself. And when that is released, probably a lot of new games will arrive from this studio, and this will be like where Microsoft wants to take on PlayStation again, because obviously PlayStation 5 outmaneuvered Xbox a lot and won the latest console war. But the next war, I think Xbox want to take steps again. We all remember Xbox 360, how great it was, and hopefully the Xbox Helios, if you want Microsoft to do well. And if you are a gamer, you want that to be a competitive product. So let's see what's happening there. They are actually at least talking about having a reset and try anew with all the expertise they have. Obviously, they are returning billions of dollars to the shareholders, $10.2 billion. And that is both dividends and it's also share repurchases that big companies have to do, because they dilute their shares when they have different type of programs where their employees, for example, chiefs, etc., get stock options. So to not dilute their shares, they have to repurchase a lot of stocks, and that's what they are doing. And yeah, here we have the full year, so I won't go down there. So the next part we will change to is the business outlook. So let's see what we have in the outlook. This is often where sometimes Wall Street gets a bit picky, and we might have a negative stock reaction on the stock if the outlook is very weak. Okay, so this is the business outlook from Microsoft. We have some currency impact, the total company revenue, not going to change so much quarter over quarter. The first quarter is often the weaker quarter, so I have to compare with like the first quarter a year ago. And productivity and business processes up to $37 billion. Intelligent cloud revenue, $41 billion. So here we just see that they are earning loads of money, and I will not just repeat what I said before and just compare like section to section here. But what's very, very important is capex, the capital expenditures. They expected to be over $50 billion, including the lease reclassification impact, and that's very much. But when we see the outlook that Wall Street had and what they expected for them more in detail, the capex is in line. You can see a bigger picture here that investment expectation remained unchanged for the calendar year, and they expected to approximately have $175 billion. So that's something good. So they are providing us with all these results and positive growth in the cloud, in Azure Cloud, Intelligent Cloud, and still remaining the same type of capex that they said last quarter, and that is comparison with Alphabet, for example, that has increased their capex. Also the same with Amazon increasing their capex. So Microsoft here, we see them not increasing capex once again, but they are still increasing the revenue in the important parts of their businesses, and that is why I was certain that this quarter was going to have a positive impact on the share price of Microsoft after hours and the next day. And as of now, we also see that it's getting a very positive reception. And I think it will take time for some of the big money here to flow into Microsoft, maybe change from some of the other big names. But long term, this is extremely bullish news, both for Microsoft, but also for my thesis around semiconductors, that it doesn't matter that maybe we'll have some weaknesses in OpenAI and their kind of long-term plan, that the offering from Anthropic is getting a bit more costly for a lot of consumers, because when we see companies like Microsoft, where the big money is providing cheaper models, having their core offering built on artificial intelligence, built on infrastructure with compute, with networking, with a lot of, um, for example, general CPUs, GPUs. We have the Helios Rack Scale collaboration they have with AMD, and the Vera Rubin they have with Nvidia. I would say cheaper models is not a problem for semiconductor companies. It's actually good. It's not like when we see mobile telephones, for example, iPhones getting cheaper to produce. It's not like Apple started to lose money. Actually, the consumers increased their consumption of the products, and I think it's the same with artificial intelligence. So overall, very bullish news for the fact that artificial intelligence infrastructure build out is working and is the future of humanity. And what we have to keep in mind here is that we have some slowness in some through Microsoft 365, but especially in the OEMs and also in the Xbox. But one thing that was very positive was their the Copilot product driven by artificial intelligence that increased, I think, from 20 million users to 30 million users just month to month. So that is really showing us that they are providing value with their core offerings. And that was one of the things we have seen both in YouTube videos and some analysts saying, oh, maybe the new Excel Copilot and Word Copilot, etc., is not good. Their business models with seeds doesn't work. People don't want the product anymore. But sometimes people just want to make content that is very negative because they get a lot of clicks. But here we see in reality what customers want, what companies want, and what makes a difference. And just listen to the earnings call, and you will get more certain about where Microsoft and the world is heading long term. So that's that. So over to my final thoughts. This earnings call basically ensured me that we are entering the next phase of artificial intelligence. So this should shift the conversation from should we invest in AI to how fast can we deploy AI, and how efficient can we be, and can we save on how can we save on our AI spending budgets. Maybe this will be the new narrative out there. And even though investing in some semiconductor companies or upstart AI companies will be volatile, I think long term this mitigates some of the risks, because we see one of the big dogs, Microsoft, having this type of earnings report will provide a lot of steam ahead for other companies, both SaaS companies, in terms of that you can earn a lot of money on spending on automation, on artificial intelligence, but also for the semiconductor companies, that the type of dealership they have, the type of deals with other companies, we will see a lot of follow through from hyperscalers, from Oracle, from the other companies that are trying to get a lot of compute ahead. Because if we just take a step back and we reframe artificial intelligence and AI spending to spending in compute, and how compute is important for companies' long term business plans, and how they provide businesses for their customers, I would say that might make it easier for some people to understand how things are working. Because in an era entering 2030 and beyond, I do believe that all companies that have like services similar to Microsoft will need loads of compute. They will need networking. They will need CPUs. They will need GPUs, graphic processing units. They will need networking. We need fast networking. They will need cooling. They will need efficiency all around. And therefore, obviously, this is not just bullish for SaaS companies. This is also bullish for the whole infrastructure as a whole. And this will be very good as a customer. It will be very positive for the market, because now finally a lot of companies out there can get their hands on very efficient artificial intelligence, um, in a way that will make their business better and still give them increasing earnings per share. So this should be good for the whole stock market long term, because basically this is the bet at the moment from, I would say, a lot of politicians, especially in the United States of America, that we will use artificial intelligence to long term boost that BNP number, to boost the revenue gains and the earnings per share for a lot of companies. So if you like the analysis provided here, don't forget to subscribe and follow through on the next video. And I see you next time.